My name is Nurul Fatin Nabilah binti Muhammad Alauddin and metric number 261113.
Assalamualaikum and hi, my name is Nur Anis Najwa binti Yaakob. My metric number is 261108 and now we present about auditing for long-term liability.
Hi, first I will introduce myself. My name is Alifah Ilyana binti Jamaluddin, metric number 261099.
Assalamualaikum warahmatullahi wabarakatuh. My name is Siti Rohazila binti Abdul Rahub and my metric number is 264977.
Is Muhammad Amir bin Muhammad Johari. My metric number is 264725. We are from Group Beli and we will present audit of long-term liability shareholders equity and income statement.
I will start with the introduction of this topic. The three main items that will be discussed are audit of long-term liabilities, audit of shareholders' equity, and audit of income statement. Audit of shareholders' equity consists of auditing dividend, auditing share capital account, and auditing reserve and retained profit. The transactions in long-term liabilities and shareholder equities account are part of finance and investment cycle, where the occurrence is less often compared to the other cycle. The transactions in this cycle are large, complex, and highly material. Due to these characteristics, it is important for auditor to ensure that their client have a qualified accounting personnel who can fully understand those transactions and accounting standard associated with it. Also, for this cycle, more substantive test procedures are implemented by auditor compared to test of control. Next, we will proceed with the next subtopic, which is audit of long-term liabilities.
Auditing for long-term liability. So in this part, there is a few things that needs to be considered, which is the first one is about what is the auditing for long-term liability, inherent risk assessment, control risk assessment, transaction and related control activities, and the last one is substantive procedure. So for the introduction, as we know, long-term liability is the liability that the entity need to pay which are due more than 1 year. So there are few examples of long-term debt financing, which is consists of notes, bond, and also mortgage. Long-term debt also have a several features that may affect the auditing procedure that will be used. So for example, the debt is callable under the certain conditions, and then debt is also can be convertible into the stock, and the last one is a debt could maybe be either unsecured and also secured by the asset of the entity. So the auditor need to make sure that the amounts on the balance sheet for the various type of the long-term debt is not materially misstated. So this assurance extends to the proper recognitions for the interest expense relating to the long-term debt in the financial statement. So the approach for the audit long-term debt is usually depending on the frequency of the financing activity. So for the entity that performing the financial activity infrequent, they tend to the auditor tend to use and follow the reliance strategy, which under the internal control is evaluated and also the test of control is being performed in order to set the control risk. So for the majority of the entity, where the auditor is not required to test the internal control over the financial reporting, it will be efficient for the auditor to just follow the substantive strategy and perform the detailed auditing for long-term debt and the related interest account. So next is move to inherent risk assessment. Inherent risk is the risk have because of the error or omissions, which and due to the factor that other than a failure of the internal control. So in this part, where there is a three situation where the first one is the volume of the transaction low, the account is usually not complex entity, and the entity often receive the third party statement or the amortization schedule. So because of these three situations, the inherent risk for notes and also bond will be assessed as low to moderate. However, the amount involved are usually high. So because of this, the financial market have developed the very sophisticated instrument that can introduce enormous amounts of the leverage that have both characteristic for the debt and also equity. So the inherent risk associated with this sophisticated instrument is usually high. So next, for the control risk assessment, this happen when the substantive strategy is applied. The auditor need to have the enough understanding about the internal control of the entity over the debt transaction. This is because they want to be able to predict the type of misstatement that may occur in the future. So due to this, they can minimize the financial misstatement, material misstatement. So there is a few exceptions that consists in this consists of the primary concern, which is the occurrence, authorization, completeness, evaluations, and also the disclosure and classification. So next we move to the assessment and also the related control activities. They have four type of the primary concern, which is consists of the occurrence and also authorization, completeness, evaluation, and also the last one is by disclosure and also classification. So for the occurrence and also authorization, the entity need to make sure that the control over the any transaction involving the long-term liability is initiated properly by the authorized person. So for the completeness, the entity need to make sure that they maintain a detailed record of the long-term liability transaction to ensure that all the borrowing and repayments of the loan principal and also interest are recorded. So next is a valuation. Valuation for notes and bond transactions is recorded in the accounting record at the face value plus or minus any discount or any premium. So lastly is the disclosure and also classification. The entity need to make sure that there is the proper disclosure on are provided for the long-term liability. So next we move to the substantive procedure, which is consists of the occurrence, completeness, authorization, occurrency, cut off, and also the last one is based on the classification. So for under the occurrence, the substantive step that was conducted is to examine the copy of the new notes or bond agreements, and then examine the board of director minutes for approval of new lending agreement. And next is a completeness. Completeness, the substantive test that conducted is trace large cash receipt and payment to source a document and the general ledger, review the interest expense for the payment to debt holder are not listed on the debt analysis schedule, and also review the notes that pay or renew after the balance sheet date to determine if there is unrecorded liability at the end year. So other than that is about evaluate the lease contract to determine if the lease are properly accounted for as an account operation or the capital lease. So next is about the under the authorization. The substantive test that we conduct is to examine the board minutes for evidence of the proper authorization of note and also bond. So under the accuracy, they conduct the test and test a sample of the receipt and also payment, and then the under cut off they will review debt activity for the few days before and also after year and to determine if the transaction are included in the proper period. And the last one, based on the classification they used to examine the due date or notes or bond for the proper classification between the current and also the long term debt. So next is the substantive procedure that will be tested on the existence, right and obligation, completeness, and also evaluation and allocation. So for the test of the detail of the account balance, for the existence, it will be used in order to confirm the notes and also bond directly with the creditor. Other than that is right and obligation. Right obligation is used to test the detail of the account balance in order to examine the copy of a note and bond agreement. So under the completeness, the test that will be conduct is to obtain an analysis of the note and the bond payable and accrued interest, which is consists of the full schedule and agreed total with the general ledger. Other than that, they will use to obtain a standard bank confirmation requesting specific information on the notes from the bank in order to confirm the notes and the bond with the creditor. So other than that, under the completeness also, they can test on inquiry of the management about the off-balance sheet activity, and then last one by reviewing the board meeting minutes for the debt related activities. So the last one is under the valuation and allocation. Under valuation and allocation, the test of the detail of the account balance can be conducted by examining the new debt agreement to ensure that they were recorded at the proper value. So however, other than that, they can use the test to confirm the outstanding balance for notes or bond and the last date on which interest has been paid. And other than that, they can recompute accrued interest payable and verify the computation of the amortizations of the premium or discount.
I will continue with auditing dividend. In auditing dividend, I will share with you 4 parts. First is audit assertions for dividend. Second, test of controls. Third, substantive test of details. And fourth is auditor duties to dividend. So for first part is audit assertions for dividend. The 3 audit assertions when performed the dividend audit are completeness, existence, and presentation and disclosure. First, we have completeness. Assertions about completeness deal with whether all transactions and accounts that should be present are included. To support the completeness assertion, the auditor must obtain sufficient and competent evidence that transactions should be have been recorded. The declared dividend that should have been recorded in the current period but are recorded in the next period will be the issue of completeness. Second is existence. Dividend report in the financial statement were approved and declared correctly. Assertion about existence of the entity exists to examine whether there are dividends that are recorded and paid without evidence of declaration from the client board of directors. In testing for existence, the auditor should seek evidence from the third party. Additionally, dividends that are not properly approved before being declared should not be recognized in the accounting record. And last is presentation and disclosure. In the notes of financial statement, sufficient and appropriate reports have been made. Assertions about presentation and disclosure deal with whether components are properly classified, described, and disclosed. The main concern regarding presentation and disclosure for dividend is that there may be some restriction by the client bank, bondholders, or other creditors. In this case, we need to carefully examine the agreement that the client has with those parties. Such restrictions usually limit the client's ability to make payment of dividend to their shareholder. If any restriction exists, we as an auditor to make sure that the client has properly disclosed them in the notes of financial statement. The second part is test of control. Test of control is audit technique to test the reliability of control that client use to detect misrepresentation. Auditor will conduct a sample of document related to transaction occurred that year, which indicate that controls has been performed. It provides evidence that the system of controls has operated in a reliable manner throughout the operating period. The main point of the test is to see if control function properly. But if the auditor encounter an error in test of control, they will expand the sample size and conduct further testing. And the third part is substantive test of details. Substantive test is audit procedure that examine the financial statement and supporting documentation to detect material misstatement or fraud. These tests are needed as evidence to support the assertion that the financial record of an entity are complete, valid, and accurate. In auditing dividend, auditor can review board of director minutes to verify the existence of approved dividend. Make sure that the dividend amount and the date it is paid reconcile with meeting minutes. If the audit client use outside agent to process cash dividend, auditor should verify the dividend transaction. Auditor can check the transaction by multiply the number of shares outstanding on the record date by the amount of dividend per share accepted by board of directors. The last part is duties of auditor to dividend. Duty number 1 is to know the rules of the company, examine articles of association and company ordinance. The auditor should check the rules of the client company. They should examine the articles of association and company ordinance, allow the management to propose dividends out of revenue profit. Duty number 2 is rate of dividend. The auditor should verify the dividend rate. The rate must not be higher than the profit rate and must not exceed the market rate. Number 3 is reasonable profit. The profit earned by the business must be reasonable because the dividend should not be paid if it is not reasonable. Duty number 4 is profit and loss account. Take note the amount of dividend record. The profit and loss appropriation account must be checked by the auditor. The auditor should take note the amount of dividend record in the client account. Number 5 is account statement. Examine amount of dividend paid and due prepares reconciliation statement of dividend account. The auditor also must examine the amount of dividend paid in the account statement. In case of discrepancy, the auditor should make detailed check so that the errors can be detected. And last duty is check the decision. The auditor should check the director decision about dividend proposal. They should check the minutes of director meeting about the concern of the director.
Today I will present about auditing share capital account. In share capital accounts includes common stock, preferred stock, paid in capital, and retained earnings, which categories in stakeholder equities. In auditing of share capital accounts, we need to be considered for 4 items: inherent risk assessment, control risk assessment, examination and related control activity, and substantive procedure. Firstly, inherent risk. Inherent risk is a measure of the audited assessment of the likelihood that the material misstatement in an account balance before considering the effectiveness of client internal control. So in the auditing of share capitals, inherent risks occur in complex transactions, which complex transactions that are contain characteristics of both debt and equity can be difficult to classify and value the component. Complex transactions have high risk of material misstatement of management to do fraud. Next, we go to control risk. Risk the misstatement that could happen in an assumption about class of transaction, account balance, or disclosure, and that could be significant misstatement material. Effective the internal control system, the lower the risk factor that could be assigned to control risk. Next, we go to assumption related on share capital. The assumption will be existing on the balance sheet date and transaction with the stockholder equity has been made. Normally, the common share capital has right over retained earnings and preferred share capital has an obligation to be paid dividend before the dividend is paid to equity shareholders. So, relevant assertion in share capital, firstly, in completeness, that have problems, some issue stock in not recorded, and treasury stock repurchase are not recorded. Secondly, in presentation and disclosure, the size of stock option are not allocated correctly between capital stock. Next, we go to internal control activity, test of control, based on control risk that normally is specific to internal control system of management. In assertion of completeness, internal control activity is management regularly obtain register of issue stock from third-party registrar and compare with recorded capital stock. Secondly, require authorization of board of director for treasury stock repurchase. And test of control the auditor must do is inspect our document for evidence that management periodically review stock register, inspect board of director meeting minutes for evidence of approval of treasury stock repurchase. Next, assertion is presentation and disclosure in internal control activity is hire qualified accounting staff and review their works. So the auditor must test of control by doing inquiry about hiring process and inspect evidence of management review of capital stock transaction. The last one of auditing of share capital is substantive test of detail. In assertion, in auditing share of capital, it have two assertions that they have identified is completeness and presentation and disclosure. In completeness, test of detail is confirm capital stock with third-party registered, inspect cash receipt ledger for presence of equity transactions surrounding years, inspect schedule of treasury stock repurchase and trace to general ledgers. Second, in presentation and disclosure, inspect board of director minutes approval of stock option and obtain schedule of stock option and test for accuracy, trace to capital stock ledger and general ledger. That's all from me about the auditing of share capitals.
Substantive test is actually have three methods, which is first, direct test on balance sheet account, second, test of selected account balance, and third, the substantive analytical procedure for income statement account.